Hello guys and welcome back to another video. So as all of you know, I'm a huge Palantir bull and Palantir is currently 100% of my stock market investment. That's how much I'm diversified into Palantir. But I also have a responsibility to tell it as I see it. And if you follow me, you know that my biggest investment regret is actually Tesla. And it was that I saw what Tesla was, I saw what it's going to become, and I somehow never understood to invest into it because the price felt overvalued. But it looks like life is giving me another chance. Faith is giving me another chance at being able to get Tesla at a reasonable price. I made a video about Tesla and Palantir being an equally good investment opportunity. And at that time, I was reasoning that because Palantir is a smaller company and Tesla is already $1 trillion valuation, I saw more risk with Tesla and I thought that it was less likely that it would, like 5x or 10x in its valuation. But guess what? Since I did that video, Tesla has fallen a lot. And what happens when you fall a lot? It means that you de-risk your thesis. And Tesla, I was always saying to myself that if the price goes below $700, I'm going to be really, really interested. And the price is currently 666. So I thought I would revisit my model that I did for you guys, which you can find in the Patreon. It's going to be the first link in the description box below. And you can also get access to all my valuation models on Patreon. It's $5 a month and you obviously support the channel and you have my eternal gratitude. So the price of Tesla was somewhere here when I made that video. And it has been in a straight free fall since then. And the good news is that I believe it's going to fall more. I'm very confident in this thesis and I'm going to show you in this video what is my thesis, what is my exact calculations. And what's amazing with this is, you can compare it with your own thesis, what you believe in, and you can change my table to see, what your assumptions lead to, what stock price it leads to, and you can judge for yourself if it's a good investment or not, because I am not giving you investment advice. I'm just simply sharing my own thoughts about the stock. So we all know that Elon Musk is involved in Twitter drama right now, which has, and since it was announced, it has made Tesla stock plunge. And not only that, there is rumors that to finance the acquisition, he needs to pledge Tesla shares in security. And obviously, when you pledge your shares in security, you can be margin called, even if you're the richest man on the planet. What happens for us as investors if Elon Musk is margin called is basically that suddenly you have a super big whale that is putting a lot of shares out for sale. That's the smallest of our worries. And the second one is that he might lose control of Tesla because he, has to sell so many shares. So obviously this is a major short-term risk for investors. I have always thought that Elon navigates the political environment crazy good. I really looked up to him on how he handles, attacks and how calm he is. And it seems like he have had enough of calm Elon and he went full beast mode and suddenly he announced that he's not voting Democrat, he's going to vote Republican, and he's throwing shade at the president, whether it's just or unjust. That's not the point of this. And this is not going to help the stock price in the short term. And needless to say, within hours of him declaring that he's going to vote Republican, we have had a hit piece from Business Insider with a sexual harassment allegation it was from 2016, from a friend of a flight attendant who Elon Musk allegedly sexually harassed. Obviously, Musk denies it. The timing is very, very suspicious, to say the least. I don't believe in this sexual allegations. I think Musk is a fantastic guy, but it's not going to stop, some people, some institutions to actually sell their Tesla stock, thereby giving us a better entry. And I truly believe that this is a very short-term thing that is going to blow over and then life will go back to normal. So now the fourth reason why I think that the stock is going to go down in the short term is because you have to understand that everybody's Tesla model evaluations are very, very dependent on growth. So if the growth would disappear from the stock, you would have panic sales, the price would plummet. Currently Tesla commands a 91 PE. That's after falling 50%. So they went from like 180 PE to 90 PE. It's still a 90 PE. And the only way that you can justify a 90p is if the company is growing like mad. And that is your biggest risk. I'm telling you right now in your thesis, if you're planning to invest into Tesla, your biggest risk is the growth going to slow or are they going to keep growing? And the moment there is a slow, they're not going to command a 90p and your investment will be effed. I'm just telling you. And basically this is exactly what's going to happen. In Q2, they're going to report disappointing vehicle deliveries. They're going to report disappointing margins and the numbers are going to be disappointing. And all the weekends and the people who don't do their homework and, don't do tables like I'm going to show you are going to, from the fear of the stock falling, they're going to sell out from the stock and they're going to create a fantastic buying opportunity. So I want to show you the thesis. So for my evaluation to work, you need that Tesla, as I mentioned, your biggest risk is that they stop growing. So the only way they can command the high multiples that they're commanding is that they keep growing and the growth doesn't slow down. Then here's a second key assumption is that for a long time, they're not going to need to spend on advertising. Every YouTube channel and on every investor call, they boast about how high their margins are and that they don't need to spend on advertising. And that is true when you're making 1 million cars per year. Now, I actually haven't heard anybody talking about this. When you go from 1 million to 3 million to 5 million cars a year and you're not selling cheap cars, I'm just not sure. This is the thing that I'm least certain about in my thesis actually. Are they going to be able to sell 5 million 8 million, 9 million cars based on Musk's Twitter following and him somehow always being able to, make it on the news and him always being able to get people to talk about him? I'm really not sure. And the moment when they start advertising, it's going to make their margin go significantly lower. However, point number 3 is that if they solve full self-driving, then their margins are going to crazy increase. So the reason why I don't think that the advertising is such a risk in the model, because I'm very confident that they're going to solve the full self-driving. So even if you're going to see in the calculation that I didn't go insane with the margin that I counted, I sort of count with that they have to spend more, making their margins go down because of advertising, but then they solve FSD, which gives them an 80-90% margin on those sales, which will make their overall margin go back up. But it's still very important to know about this. And in my thesis and in the table that you see, I don't think with Robotaxi and the income from that, it's a very high margin, very scalable income that can lead to very high growth, potentially also cannibalization of their auto business, but very high margin, very high growth. And I'm not thinking with Tesla bots. So you basically just get it on the buy. It's included in the package. Right now, you're not paying any money for it. So now we go to what is the key risks in my assumptions. So one, that Elon gets politically attacked. I think there is a very slight likelihood of, or basically no chance of this happening, but I still have to say it because if they find something that is really incriminating or really bad, and because people are really after him now and they're going to try to dig up any dirt that they can. And should they find something that is very, very serious, then it might lead to him stepping down as a CEO. As I said, I think it's a 0.000001 chance of happening because Musk has been, very transparent, and he, even when he makes mistakes, he's not the kind of guy who doesn't, take responsibility for them. And even if something would come up with the sexual harassment or I don't know, I feel that he would still be okay after that. Then the next key risk is that this is a short-term risk, 2022, 2023, maybe 2024, but not longer than that, is that the auto stocks and the auto sales are very much connected to the economy. So when the economy is doing great, auto sales are doing great. This is why the auto stocks are called cyclical stocks. And when recession hits, then these companies almost always go bankrupt or they become very near bankruptcy. And this can affect Tesla because they are selling a very highly priced car, and it again might mean that they need to advertise more, lower their prices, which would mess with their margins. This is a valid risk, but it's only a short-term risk because obviously now we are in a bear market and there's lots of recession fears. But good times will come, and the Fed will not always be hawkish. They are probably going to be dovish again, and then things will go good again. Then another risk is, Elon Musk. Obviously, everybody knows that the stock has an Elon premium. And, if he was not at the helm of the company, I believe that the stock would plunge a lot. However, Tesla is not the same small company as it was before. They're a gigantic company. I don't believe that he has to spend the same attention that he used to on Tesla. I believe if it would be a Tim Cook, Steve Jobs situation that, Steve Jobs created the iPhone, created the iPad, and then he passed away, and Tim Cook basically was able to double and triple and quadruple, don't quote me on this, but yeah, very many times over grow the company after Steve Jobs, the visionary, was gone from the company. And Elon Musk has laid out such a product roadmap, and there's gigafactories being built, the whole culture. They attracted the best employees. They have very good investors. So even if something would have happened to Elon, I believe it would be a short-term thing and the stock would survive. But I do still mention it as a risk. And then number 4, which is again another risk, I believe it's a very, very small risk. If they don't solve FSD, then it means that your future margin calculations will not work out. And, many assumptions in your model will not work. Do watch YouTube videos about where FSD is. I believe currently there's 100,000 people doing the trials. It's very, very advanced and it keeps getting better by the day. I don't see there is a way that they don't solve full self-driving. The only thing that can happen is that he's too optimistic on time and it takes a bit longer. But I believe that they're very close to solving it. It's not a very big risk. So let's go over to the actual numbers. This is the really exciting part. And again, I really want to encourage you to, check out the Patreon, download this table. Even if you don't check out the Patreon, then make your own table so that you have an idea of what the stock price should be. And, you can play with it, because maybe you say that I don't believe that they're going to grow 40% per year. I basically laid out the years here. I'm very interested in what they're going to do up until 2030. And as a reference, I added here the number of vehicles. This is the number of vehicles that they delivered. This is in the wrong place. Let me just change it. This is like, if they're growing 40%, like I think that they will be growing, then they need to deliver in 2022, 1.3 million, 1.8 in 2023, 2.5, 3.5 in 2025. And I'm super confident up until 2025. This is like after 2025, I feel that you need to reevaluate, because this is where my concerns come in. Like, is there really demand for that many Teslas? Can they really sell them without advertising? Can they build that many gigafactories? So I really want to revisit it. And as you see, I have lowered their growth as we go closer to 2030, significantly lowered it. Then their operating margin last year was 16%. They guided for a much better operating margin. This is also why the stock price and the PE changes so much, because they went from barely making profit to making, 8 billion in profit. And then if they're really growing 40% and on top of it, they're growing the operating margin, the earnings per share, which is one of the numbers that you use to calculate the PE, is going to skyrocket. So even if the PE is 200 today, but the EPS 4x's, then suddenly next year you're at 50 PE, right? I believe that this is a very low counted margin. I'm saying that they will go up to 25%. Again, this leaves a little room for error on that they do need to advertise to sell their cars. But it also, I thought with that if they do solve FSD, then they have a very high margin product that just, almost goes straight to the margin. So the long story short is, if my calculations are correct and they're growing 40% per year, they will have a 51 billion earnings in 2025. And if the PE is 40, which gives them a PEG ratio of 1, which is crazy undervalued. It's like super unbelievably undervalued. Then you would get a stock price of 1,863. The stock is currently 666, right? So this table is showing if you would want to get a 30% compounded annual return up to 2025, the stock price would have to be 652 for you to get this price in 2025. The stock price in 2030 is 4,700 67 and the price of the stock today would need to be 450. However, this calculation is crazy pessimistic. I would like to point out that currently Tesla has a PEG ratio of 2.2, a PE of 91, and even in 2025, they will still have a growth rate of 40%. So I think it's highly unrealistic that they will have a PE of 40, and I think it's much better to calculate with a PE of 60 and even higher, which would be a PEG of 1.5, which is still very conservative and undervalued for a growth stock, as long as their growth is as much as I'm predicting, right? This is a realistic, like actually the first one that I showed, it was a stupid pessimistic calculation. And even with the stupid pessimistic calculation, the stock is still a crazy deal. So now if we come to a more realistic calculation, you would get a 30% return if the stock is at 979. But the stock is way below that price. For fun for myself, I want to see. So currently you're able to get, according to my pessimistic, real calculation, a 42% annual return on Tesla based on where the price is at currently today. For the 10 years, the stock price does need to go lower, but yeah, we're looking at up to 2025. So Tesla is a crazy deal. And here's the crazy thing. I think it will go even lower because of all these headwinds that I mentioned in the beginning of this video. I really encourage you to do your own research, download this table from Patreon or make your own table, play around with your assumptions. And, if you don't think, okay, they're just going to grow 30% because it's not real for me. And then, you change the numbers to 30%. Then you say that the PE, I'm actually very curious, 511 with the 42%. Okay, let me see. Oh my God. You see, even with 30% growth, you're getting a crazy deal at 60p. Again, change all the numbers. Look at the thesis. Look at what you agree with, what you disagree with. I believe that you will find that I was quite conservative and pessimistic on the numbers. And come to your own conclusion. I know what I'm going to be doing. I'm going to be buying Tesla stock hand over fist as long as the price is staying in this range. Let me know what you think, and thank you for watching, and I'll see you in the next video. Bye bye.